The aim of the Investment Summit is to share with our clients our internal perspective on markets as much as external views on how the world is going. What our guests can take away from this gathering is probably 50% from the content of the conference and 50% from the exchange they have with other private investors, other families, sharing the same concern and discussing about their own objectives. We have asked long-term friends and partners of Pictet to share their views about the different asset classes. One of them is David Rubinstein, co-founder of Carlyle, whom we first met in 1995 when Carlyle was fundraising its second fund.
Carlyle, like all private equity firms, is now dealing with relatively high valuations for companies we buy. Now, that makes it more difficult to get the valuations we want on the exit. So what we try to do is add value by having operating executives make the companies much more efficient than they would otherwise have been. We also have to realize that the rates of return are probably going to be lower than they were 10 or 15 years ago, but still we think that we can get mid-teen rates of return for our investors, and we think that's a reasonable rate of return. But we're very cautious and we don't want to overpay. The biggest sin in private equity is overpaying at the beginning. It's very hard to overcome that. So we try to be very cautious. Trends in private equity today are many. One is that people want more and more private equity in their portfolios because they realize that after looking what's happened over the last 10, 20, and 30 years, private equity generally outperforms other asset classes, and even if returns in private equity are coming down, they're still likely to outperform other asset classes. Another trend that's going on right now is that more and more family offices are being created, and more family offices are actually doing their own private equity investing, and that is increasing the amount of money available for private equity. Another trend is that the emerging markets are beginning to emerge as important parts of private equity. Historically, 85% of all private equity investments occurred in the developed markets. Increasingly, that's going to go down as a percentage because more and more China and India, Latin America, the Middle East, and Africa are going to be important places where private equity dollars will be invested, though it'll be more slowly than in the developed market. Still, I think private equity is recognized as an asset class that's not alternative anymore, it's mainstream. And I think that's the main thing that's happened over the last 10 or 20 years. When I was trying to raise money for Carlyle's second fund, I think in the early 1990s, I was fortunate to be introduced to Pictet. Pictet said, well, you're not that well known, you don't have a long track record, but we might put some money in with you and see how it works. It's turned out to be one of the most important relationships Carlyle has had in our 32-year history. We're very pleased with the relationship, and we're pleased because they stayed with us when we were young. We've made mistakes in the times, over some periods of times, and they have recognized that people will make some mistakes. But right now, they, I think, recognize we are very good at private equity, and we're a good partner for they and their clients.